It seems on the luxury and semi-luxury goods, it's carrying on seeing quite a lot of strength in China. I mean, when we look at the broad data, we're clearly seeing a bit of a slowdown in Chinese economic data, in consumer confidence in particular, and clearly any trade barriers that come up are going to weigh on that as well. But it's definitely a very mixed story with China. Those who have a huge amount of their sales already to China, I think, are being hit a bit more than those who are trying to grow that region.
It must be quite difficult as an investor to parse through all of that, because our assumption, just outside in, looking at the macro data, everyone's talking about the slowdown domestically, externally driven as well. And yet some companies point to a robustness in Chinese growth and Chinese consumption demand still, and others don't. So when you're thinking about analyzing a company, how do you account for the China macro?
So the main point there is trying to divide up between things which are consumer discretionary and consumer staples. I think things which are more staples are more exposed to general shifts in consumer confidence, whereas that kind of emerging middle class story that we've got should help consumer discretionary a bit more.
When it comes to earnings more generally, not just in Europe but beyond this season, do you think that investors are looking more at the past 3 months' performance, or are they looking more at the forward guidance?
They're definitely looking at the forward guidance. So if you look at the statistics on how markets are reacting just very quickly to the earnings produced, particularly out of the US, actually it's relatively, whether you miss slightly or you actually beat, you're being treated relatively similarly by the market. But what people are really looking for is what your 2019 guidance is. And again, when we're talking about what the strength of the US or the European economy looks like over the next 12 months, we're hearing quite different stories from varying companies. So we saw, Caterpillar, for example, coming out of the US saying actually quite a worrying growth outlook, whereas actually a few other companies are a bit more constructive.
So talking about specific sectors within Europe, today obviously we're seeing a big bounce in oil and gas because of those bumper numbers out of Shell, but we also had some solid numbers out of Roche as well too. So how are you thinking about allocation in terms of sectors in Europe? Do you think oil and gas is a place that you want to be despite the volatility in the underlying, and also healthcare is one that also comes to mind?
So oil and gas and the energy sector and commodities more broadly are traditionally not a very late cycle trade. So actually we're tending to be underweight those, but actually healthcare, so Roche is particularly strong given the fact Acrevus has been one of their strongest performing ever drugs. So it's got that as well. But healthcare as a sector, you're tapping not only into those long-term demographic changes which help the sector, but it's also defensive. So as we're entering the latter part of the economic cycle, you want to be shifting away from the more cyclical sectors into defensive such as healthcare.
And are you generally bullish on where European equities can head this year? It's been a really difficult 12 months for European equities as a whole. Are you getting any indications out of the earnings the last week or so that things could be looking better in the next few months?
So we're still relatively cautious on Europe. We think if we are moving late cycle, regardless of what the Q4 earnings are looking like, actually looking at 2019 in whole, we're looking at low to mid single digits in terms of earnings. And actually that's even with 12.5 times forward PEs. That's not looking hugely attractive to us.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.